What's up, guys? It's Jake. Welcome back to my channel. Today we are going to be taking a look at something that you may have been reading a lot about: Warren Buffett increasing his cash position to record level highs. So currently, Berkshire Hathaway is sitting on a record-breaking $347 billion in cash. That's not just a big number, that is a astronomical number, okay? It's enough to give every adult in the US anyways, $1,300. So why? Why is Warren Buffett, one of the greatest investors of all time, just sitting on that much cash? Why does he not have it invested? What does that mean for the rest of us as well? We're going to break all this down. So Warren Buffett, he's actually stepping down as the CEO of Berkshire Hathaway, but before he does, he is seemingly making some huge moves, and the public is paying attention. His company's cash right now makes up about 30% of all of its assets. That's a very high number in general, and that is the highest that it's ever been for Berkshire Hathaway. The last time that it got that close to that level was 2006, right before the financial crisis that started in 2008 and ruined a lot of people's lives. We also saw spikes of this in 2021, just before the 2022 bear market, and in 2000, right before the dot-com crash. That's why people kind of call him the Oracle of Omaha, is his nickname. He just has a reputation for avoiding major market disasters by stepping back when things start to look risky. He doesn't sell his whole portfolio and just put it all into cash, but he does have a very uncanny knack for timing the market. Not something that many people can say that they can do. If you asked Warren Buffett, though, he would say that he doesn't actually try to predict the future. He said over and over and over again that forecasting the economy is not part of his strategy. In fact, he's actually joked that being an economist isn't very useful when it comes to making money in the market. Kind of ironic. Instead, his approach is based on one simple idea: buy great businesses when they're reasonably priced. And when things are overpriced, he waits. He holds cash. And that's exactly what we're seeing right now. Things are overpriced. It does not take an expert in economics. It does not take a Warren Buffett to recognize that things are overpriced. So all he's doing is sitting here, taking in the social sentiment and being like, I think I'm going to wait a little bit. Why is he waiting, though? We can actually speculate and kind of dive down that rabbit hole because there's a lot of public information that's available. We already know that the market's expensive. We just talked a little bit about that. When you look at it through a historical lens, it is extremely expensive, though, looking at all of these indicators and data that we have that we can draw on from years and years and years of studies and financial information. One of them is called the Warren Buffett indicator, or just the Buffett indicator, sorry. It compares the total value of all US stocks to the size of the US economy. Right now, that ratio is 200%, and that means that the stock market is worth twice as much as the entire US economy. That is pretty overvalued, and that is also the highest that it's ever been. The last time that it got that high was right before the dot-com bubble burst. And just before that, right before the 1970 recession. So even though Buffett is sitting here saying that he doesn't make any predictions, that there's nothing specifically that he's looking at that contributes to his crystal ball, the real story behind that is that data actually tells him that stocks are not a bargain right now. So he might not be looking at one specific piece of data, but just a culmination of the data saying that, hey, things are overpriced right now. He's going to wait. So let's be clear about this, though. High valuations do not mean that the stock market is going to crash tomorrow. I covered this in my video yesterday about crypto. We could go up for a considerable amount of time. And you know the cliche saying, markets can stay irrational longer than banks can stay solvent. That means that markets will go up or go down for far longer than you think that they are going to, and far longer than most people think that they're going to. So the best thing is to not try and time the market. Also, these indicators that we're talking about, like the Buffett indicator, are not meant for short-term pricing. They're meant for the long run, and over weeks, months, and years. Again, prices can stay way higher or way lower for a much longer time, and the longer of a time frame that you use these indicators with, the more accurate you're going to be. That being said, though, despite all the ups and downs, markets over the long run usually return to their normal levels. So that's what investors mean when they're talking about reverting to the mean. If we are over a certain moving average of numbers or over the average stock market increase year over year, at some point we are going to come back down to that average. And that's kind of where we are now. We are way over all of the historical averages. So it's reasonable to think that at some point within the near term future, we're talking about maybe the next couple months, maybe it is in the next year or the next 2 or 3 years, we should see some sort of at least a little correction. Buffett's whole method is built around that idea. When we start to get into the overvalued territory, he just waits, and he waits for months or years at a time. It's not flashy, but over time it is proven to work. Over the past 25 years, Berkshire Hathaway has returned 1,400%, which is 15% annual return. Compare that to the S&P 500, which is like the golden standard for investing. That's returned 300% in the same period. 300% is still great. But if you just did a little bit of analysis yourself or just paid attention to people who did, and the times when things felt the most expensive, you just waited a little bit, you would be doing a lot better. Now, that's easier said than done, obviously. I'm just trying to explain what Warren Buffett is doing in layman's terms. But here is the overall takeaway of this video that I'm trying to get at. Warren Buffett's huge cash position isn't just about predicting an economic collapse. It is about staying disciplined and waiting for the right opportunity. So again, that's going back to when things seem and feel super overvalued, you might want to reduce your spending a little bit, save up a little more cash in case there is a correction that you can take advantage of. That doesn't mean just completely take yourself out of the market, but a little bit of waiting. Warren Buffett is in 30% cash. He's not taking all of his portfolio out. He's just doing a little bit of waiting on the side. It's not a dramatic call. He's not making a dramatic call. He's just staying a little bit patient. A pretty powerful lesson for the average investor, especially beginner investors. You don't always have to be doing something with your money. You don't always have to have everything in the market at once or everything out of the market at once. And sometimes the smartest move is just to wait until the price is right. So do with that what you will. There's a lot going on in the economy right now. I urge you guys to stay diligent. We are at all-time high prices. Things get very volatile in either direction. So just be careful, and I would say don't overextend yourself in a time like this. It's always good to have a little cash on reserve, and it's always good to have more cash on reserve the more heightened these prices become. So thank you guys for watching. If you found this video helpful, make sure to subscribe. And if you're curious about how the Buffett indicator works or want to see more beginner-friendly breakdowns like this, make sure to subscribe so you can see all the future videos that I'm going to make. Make sure to drop a like so we can get this video out to the algorithm to help as many people as possible. And also make sure to comment. Tell me your thoughts. I want to hear what you thought about this video. I want to hear what you want to hear about in the next video. And I just want to engage with you guys. I love responding to all the comments. So be happy to make a follow-up video on any other content or follow-up video on this content. So we'll see you in the next one. Peace.